And it's just basically draining the silver inventories, and you're seeing all these outflows like SLV and the like being drained to fill this structural deficit. Sooner or later, they're going to run out of silver to plug the holes, and everybody's waiting for that day, although it hasn't arrived yet. It will sooner or later.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. And finally, 1/10-ounce Gold Britannia are just $29.99 over melt per coin. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this distinguished returning guest, Ed Steer, a longtime student and analyst of the metals markets, and perhaps one of the most astute informers of the public based on the studying of the commitment of traders' reports, import and export activities, and other actions that are happening in the physical metals market and the futures markets, is here with us again on Liberty and Finance. Ed, thank you for joining us once again.
Well, thanks for having me on, Dunnigan.
I should inform everyone today is Thursday, December 12th, 2024, that we were recording this. And some of the conversations you and I were just having were based on most recent activity, both today and over the past week, and the commitment of traders report that just came out last week. One thing that you mentioned to me is huge silver activity going on the exchanges. If you could bring us up to date on what you're seeing that stands out to you.
Yeah, the activity in the COMEX stockpiles in silver the in-out activity has just been enormous, and just absolutely enormous. It wasn't big yesterday, but on Tuesday and Monday, it was just huge. And then yesterday, in SLV, there was 5.8 million ounces of silver removed from SLV yesterday. And that was on top of the, I think I have the number right here someplace in front of me. That was 5.8 million ounces yesterday and another 2.3 million ounces the day before. Well, let's put it this way. They had 475 million ounces of silver in there on the 5th of December. And as of yesterday, it's down to 463. So it's down 11.6 million ounces in just a week's time. And then overseas yesterday in England, there's a couple of, in SLV, like I said, there was 5.8 million ounces removed yesterday. And over at Wisdom Tree in the UK, there was 7.6 million ounces of silver withdrawn from it yesterday. And in Aberdeen, which is another silver mutual fund in Great Britain and probably Scotland, they added 5.5 million ounces. So the amount of silver moving in and out and, in the COMEX, SLV, and various other sundry ETFs is absolutely massive. And this has been going on for a very, very long time. So, it just means that silver is in very, very high demand. And as everybody knows, there's a structural deficit in silver, which has been going on for 4 years. And in 2 weeks' time, it'll be in its 5th year. And I think this year they were forecasting a deficit of 182 million ounces or 200 million ounces, something like that. And it's just basically draining the silver inventories. And you're seeing all these outflows like SLV and the like being drained to fill this structural deficit. Sooner or later, they're going to run out of silver to plug the holes, and everybody's waiting for that day, although it hasn't arrived yet. It will sooner or later.
Can you remind us about the nature of for example, the COMEX? Was it originally intended to be a mechanism for physical delivery, or for hedging prices for producers, etc.?
Well, its original purpose was to, way back when it was first set up, was for the ability of producers to lay off risk on speculators. The farmers and ranchers, and for cattle and grain and whatever, way back when, they wanted to lock in a price and they wanted a speculator to take the opposite side, because if you want to go long or short, somebody has to take the opposite side of the trade, because you can't go long or short naked. And that was its innocent beginnings way back when, but the banking system and the big hedge funds and commodity trading houses have totally perverted it to what we have today, where it's now as a mechanism for controlling the price by, being the short sellers of last resort, which is what the bullion banks have become. When somebody wants to go long, the banks don't allow the any market free market pricing mechanism to happen. They just come in and jump in on the short side right away, so there's no real price discovery going on. So, from 50, 60, 70 years ago, from what this COMEX used to be to what it is today, it's just basically a price-setting mechanism for the American empires, and they control the prices of all the world's commodities. And it's just part of their, full spectral dominance, whether it be sea, land, or air, or finance, or whatever. The control of commodity prices, precious metals in particular, is just another aspect of that.
You've mentioned price management in the past as one of the major mechanisms that happens on these major exchanges. You said that this weekend, and just this week, we've seen a spectacular example of that. Could you elaborate?
Well, sure. This price management scheme is, Ted Butler came across it 40 some years ago, and I've been following it for 25. And if you're looking for a case in point of spectacular price management, how about today? Yesterday, we had a CPI number that drove the price of gold and silver higher, and then when Globex trading opened at 6 o'clock on Wednesday evening in New York, prices took off, gold and silver prices took off higher. But the moment that London opened, the short sellers of last resort, call them whatever you want, they took over the price mechanism. And even though the PPI number came out this morning red hot at 8:30 this morning, they continue to run prices lower. And what have we got? Gold's down, $35 or $40 right now, $45. And silver's down almost $1. I mean, that is so counterintuitive. It flies in the face of what should really be happening, and what, the banking system and the powers that be. They don't want people running to these inflation hedges like gold and silver. So they just stepped on the price, and it was blatantly obvious today.
When we used to talk to Ted Butler about this, God rest his soul, he talked about that they are also these players, the large concentrated short players who are making these major moves that affect the price in that way, are able to do it in such a way that it actually becomes a profitable trade for them every time. Can you describe to people how that's even possible?
Yeah, well, the thing is that, they all work together. They're collusive, very collusive in nature. You get the 8 largest traders. They're all bullion banks, and they're all investment houses, and they all talk to each other, and they decide when the prices are going to go up and when they're going to take them down. It's like today's price action, it didn't happen in a vacuum. It happened by these collusive commercial traders deciding at whatever time we're going to come in here, and we're going to pull our bids, we're going to spoof, we're going to do whatever is necessary to trick the managed money traders and the other reportables and all the other traders into thinking that the price is going down. So they sell into basically a vacuum, and down the price goes. These 4 and 8 traders never reach up ever to a price. They wait for the managed money traders and the other traders to come down to them. So as they keep selling, they keep lowering their bid, and they buy it on the cheap on the way down, and on the way back up again, they sell for a profit. I mean, it's been a profit thing for them for a long time, up until about 3 or 4 years ago, when all of a sudden the price really took off. And I think that was I can't remember how long it's been, 8 or 9 or 10 years since, they made a lot of money on this thing in the last 40 or 50 years since this has been going on. But then all of a sudden the tide turned, and now the price of, they can't hide the fact that inflation is out there and that the prices have been managed for such a long time. So, prices have gone from $1,000 way back when up to almost $3,000 now. So this forces these big 4 and 8 traders and to go even further short on the long side, or even further short, to prevent the price from totally exploding. Because if they put their hands in their pockets right now and didn't do anything, didn't put another short on, you'd see gold blow through $3,000 by the close of COMEX trading tomorrow, and silver would be over 100, because they're the only entity standing in the way of this. They made money on that, but now that the prices are rising, all they're doing is trying to prevent the rise. And I think Ted said they were like $20 or $25 billion in the hole on their short side of unrealized losses. They're paper losses in their ledger right now, but, if they ever turn them into actual losses by covering, it's going to be a financial crisis of biblical proportions. But like you said, Ted said they were making money for a long time, but those days are long gone, and they are really in the hole big time now.
Now, in the face of all this, and you've given us a chart in the past that we've shown, perhaps we could get an updated one from you just to give a visual for our viewers as part of this discussion about how concentrated the short positions are in the COMEX market. Is it not true that the Commodity Futures Trading Commission, the CFTC, and others are supposed to be watchdogs to make sure that there's free and fair markets, and that this kind of collusion and kind of price management doesn't occur in any commodity?
Oh, exactly. That's what they're there to ensure. That's why they have the Commitment of Traders report there, and that's why they show the big 4 and the big 8, so that you can see at a glance how concentrated these long and short positions are. And the chart you're referring to, as a matter of fact, I downloaded it to my desktop, and I was going to send it to you this morning when you called me, and it just completely skipped my mind. But I'm looking at it right now, and I'll send it to you once we're done this interview. But it shows, it's stark. The short position in silver right now is 5 months of world silver production, and platinum's not far behind. And the big 4 are short the most, and the big 5 through 8 are a very, very small number. And to tell you the truth, and Ted and I both agreed on this, is probably not the big 4. It's probably the big 1 or 2 they're short the vast majority of the precious metals. And the chart you're talking about is the concentration of traders, or what I call the days to cover report, which shows just how many days of world production these big 4 and big 8 traders are short the market. And in gold, silver, platinum, and palladium, it's absolutely obscene. And silver is the most shorted metal on planet Earth, and it's been that way for, ever since we went off the gold standard in 1971, and at least for the last 25 years I've been watching it, and for the 40 years that Ted's been watching it. It's just grotesque. The CFTC is supposed to be doing their job. This has been pointed out to them by thousands of people in some of the right-wing campaigns that Ted's had over the years. So they know perfectly well what's going on, but they're part of the empire. They're there to ensure that they're working on behalf of the short sellers, as of the CME group, where all this stuff is transacted. And it's just, like I said, full spectral dominance of commodity price is just one aspect of the American empire. It's as simple as that.
In response to that, just as in response to the weaponization of the dollar through the SWIFT system sanctions against Russia, for example, after the Ukraine invasion, etc., there's been a increased pivot away from dependence on the West by the BRICS plus nations. Do you have any observations of how the price setting mechanism that you've just described in the concentrated short positions in the, I guess, the willful blindness of the regulators is playing out in the light of others who are deciding that they don't want to continue to be subject to that to that kind of mismanagement of this exchange going forward?
Well, what they're tired of it is finally come up in the open, and the BRICS is, confirmation of that is, basically they're tired of the American empire, of being, how many regime changes has the U.S. pulled off in every country in South and Central America and Africa and in Eastern Europe over the last 100 years, since, you and I were born. It's in the hundreds. And the countries of the world are just tired of it. And the U.S. dollar is just another item of the full spectral dominance that, they force everybody to use it. And, finally, they weaponized the thing against Russia and other countries as well. And if you don't want to use the dollar, or they don't like you, or you're not doing what you're supposed to, they'll sanction you for this and sanction you for that. And, the rest of the world just said, we've had it absolutely up to here. So, they came along with this BRICS, and they were talking about having their own settlement currency, which never came to fruition. And of course, Trump has come along and said, you dare come up with another currency, and we're going to put 100% tariffs on your goods that come into our country. I mean, what kind of talk is that? It's the talk of a dying empire is what it is when you have to threaten every country on earth to use your currency to transact their business in. I mean, the whole thing is like, you couldn't make this stuff up, but like I said, we're seeing an empire that's on its last legs, and they're desperate to keep power any way they can, whether it be through the dollar index or through control of commodity prices, or at the force of a gun in the Middle East or the Ukraine or whatever's going on. It's just an empire run amok.
You've mentioned the structural deficit in silver. That's been reported by the Silver Institute year after year after year. How do you see the end game on that playing out? How long are we away mathematically from just the exchanges being drained dry and that mechanism that no longer being available to try to maintain control of this price and of this most shorted commodity in the world?
Well, that's a very good question. Everybody's been sitting here waiting, including all your listeners, for this day to arrive, and including me. The structural deficit has been going on for coming up on its 5th year, and sooner or later, we don't know what day that is, London is going to run out of silver. That's where it's all coming from. And Ted was of the opinion that, after we had that big price smash from $50, that was in April 2011, May 1st, whatever it was, that JP Morgan was able to accumulate, a bit over 1 billion ounces worth of silver, which they've got all stored in London. And they're the prime entity right now that's feeding the silver deficit out of their stockpiles in London. And when their largesse ends, or they run out of silver, they decide they want to sell anymore, that'll be the day that the prices are off to the races. And you won't have to ask what day that is, because it will be in the price. And as a corollary to that is even more important, is something that people miss entirely. I've spoken of it many times in my column, is that once that day arrives, is that there's no more silver. Whatever is being produced by the primary producers of silver, or those that are used to, mine it as a byproduct, whatever that production is, 800 and some million ounces a year, I think is what the Silver Institute's come up with for production. It doesn't make any difference whether silver is $500 an ounce. The amount of silver coming out of the ground isn't going to be any different than what's coming out of it. It's going to take decades for this deficit problem to go away, if it ever does. And the other problem is going to be is that once silver starts to take off, is that the investment demand, which has been very poor lately because of the price action, it is going to surge to unbelievable levels. So you're going to have the structural deficit plus demands for hundreds of million ounces of silver, either through the ETFs or people running down to their local bullion store. There's just no way this is not going to end without a massive, massive price explosion when this finally does end. And as I've been saying for the last 15 years, when it does finally end, it won't happen in a news vacuum. It's something else that's going to be going on in the world at the time. And there's enough things going on in the world right now. They could let it go anytime, but we're getting very close to the end game. But if you want me to pick a day or a month or a year, I won't. I'm not gonna speculate, but I can tell you whether the day it arrives, you'll know when it is for sure.
Ed, for people who want to take advantage of your ongoing daily and weekly analysis of these markets and to be well warned as things change, and they can change rapidly, how should they get connected with you?
Oh, they can just Google my name, Ed Steer, S-T-E-E-R, Ed Steer, Gold and Silver, and my website will pop up. There's a free sample column there, and they can click on that free sample column, and they can read that, and it gives them an idea what they get they get every day, 5 days a week for 52 weeks, about 260 columns a year. And the cost is US $100. So if they're interested, they can check it out.
We've been speaking with Ed Steer, metals market analyst, and we've been grateful, Ed, always for your visits here with us. Looking forward to more. And thank you for also just directly for your work with TED and your contributions with GATA towards just exposing the lack of transparency in these markets so that people can be better informed, make better choices, and I guess just be better aware and prepared.
Yes, well, thank you for having me on, and season's greetings to you and to all your listeners.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. And finally, 1/10-ounce Gold Britannia are just $29.99 over melt per coin. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.